Hey there, and welcome back to the channel. Wow, what an interesting day of trading. I only traded a couple trades today. I had other work I had to do, but I did want to jump in here and do a quick recap on the day to show you some of the great opportunities that took place. First thing I want to look at is the pre-market, the overnight action that rolled down off of yesterday's close and came down to this area right here where there was this sort of big indecision zone just before it blasted off yesterday. And that's also an area where yesterday's previous day VWAP close was sitting. And in the overnight market, that came down and took a very decisive bounce there. And that actually put in the low for the pre-market action. And as we move forward, we see that there were a number of areas that the market retraced down to and caused areas of indecision. This would be one of them. This would be a bounce off VWAP and another indecision zone that then, after running in the pre-market, rolled over, and in the late pre-market, about 4 hours before the market opened, retested some of these areas to create brand new indecision zones, which I took advantage of about 15 minutes before the market opened. And right here, we're looking at a 1 minute chart, but I'm going to flip to a tick chart and I'll show you why I felt that this was a spot that I could expect to have a bounce. And I'll go down to 233 ticks. Now let's look at that area in the pre-market. I was checking my charts, setting up my charts for the day's trading, and I saw the market come down rather aggressively down to this area right here. And I thought, very often what the market will do is it will test pre-market lows and bounce to an area, maybe even as much as VWAP, prior to the market opening. Then we'll come back down and test them again before deciding to run if it's going to be a bullish day. And so I saw this area here and I was drawing it and I was looking back a few hours and I was saying, yeah, I can see that indecision candle right there. And at the time, this was not value area low, so you can forget about this yellow line right here. But I was saying that I can see it coming down and touching this, or I can see it coming down and touching this in the pre-market. And so I drew these two areas, and then as I was drawing this area, I said, wow, I think I might like to take an entry here. And then if it comes down to this area, still during the pre-market, I will add to my position and see if I can get out before the market opens. And what ended up happening was I took one position here, and then I saw this indecision candle right here preceded by this area right here. And I said, you know what? That's where I'm going to get out because that's where the 100 EMA and SMA are. So I took this entry right here, and it turned out to be a great little pre-market trade. And then, after the market opened at the cyan blue line, it bounced up to this half gap area and the 200 EMA SMA convergence right there. And then tried to make it up to previous day close, which you can't really see the gray dashed line because VWAP is overlapping with it. But what it did make it up to, and here's the difference between the previous day close, which is this gray dashed line, and this white solid line, which is the pre-market open. So literally what happened yesterday was the market closed here and then slightly gapped down and opened here. And that would be at 5 p.m. Central Time. So what it did was it ran up, danced around half gap a little bit here and the 200s, and then it ran up and could not make it beyond the pre-market open before rolling over and going beyond this spot of indecision from the early pre-market that I took a bounce on and actually went down to this next area and took a bounce there. And if we go back and look at that spot, we see that that's a very logical place, because that was the spot, that was the area that really the market came down to in the pre-market overnight, and then had a very big bullish move. And then moving backward from there, after all of this down move and all of this up move, we start to look at areas where the market could come down to try to catch a bounce. This was the next area. This would be another next area. This is a lot of choppiness, which doesn't apply to our rule. And the rule is we look for an area where there's a very small candle or a couple of very small indecision candles before exploding off into one direction. This would be a similar example. It comes down, it comes down, it comes down, and it goes sideways for a couple of candles before it explodes off in one direction, then comes back down and tests that, moves again, comes down and tests this area, and explodes. So this would qualify as that indecision area, which was followed by an explosion. And if we move forward on our timeline, let's go back to a 1-minute chart. And here we are back on our 1-minute chart looking at just before the market opened. And then the market ran up on this first candle, ran down, and took a bounce just beyond this indecision area and right into this next indecision area. And again, you can see those indecision areas much more clearly when you move to a tick chart. Then, as we move forward on the morning, the market ran up, retreated, ran up, retreated again, and then retreated right down to this area of indecision. Now, later on, what happened? We have this running up and retreating at intraday VWAP, and then running up and retreating at VWAP, and then running up and retreating at today's yesterday VWAP close. Then, later, it came down, bounced off the RTH open, and bounced ferociously up to this pivot point and retreated. Now, this value area low from the day's volume profile was right here at that moment. And I did take this entry long because of this candle, this block of indecision right here before this explosive move, and the fact that value area low from the volume profile was right there at that moment. Then as we move forward on the day, we have price running up to a pivot point and retreating, up to the pivot point again and retreating. Now let's take a look at some of the other instruments. NQ did something very similar to ES in the overnight. Came down just to this area that was an explosion from the previous day, and then put in some of these indecision zones in the pre-market that provided for good bounces in the pre-market and just after the market opened. And when it came down, it actually ended up that this was the weekly pivot point, which provided for a couple of very nice bounces right there, and then again right there. And then NQ ran up to the POC area, retreated, again, bounced off the RTH open, and this time it didn't run all the way up to the pivot point, but it ran up to yesterday's VWAP close here for NQ. What's next? Here we have the composite, which is following similar action to NQ and ES in the pre-market and right after the open. It bounced, and due to market exuberance, it went beyond the yellow dashed half gap. And again, retreating back to the intraday VWAP, running all the way up, and with exuberance, running just beyond this gray dash previous day close and all the way to this pivot point before retreating. And again, the composite is used to direct you how to trade NQ. And if you haven't yet seen the video that I put up on the composite, go back and check the list below in the notes for the instruments that cannot be traded but must be used if you want to trade NQ. So anyway, the composite then bounced all the way up to this perfectly rejected at the 200 SMA from the 5-minute chart. And again, it's probably the most important moving average that you're going to have on your chart, whether it's ES, SPY, SPX, NQ, Qs, the composite, or NDX. And again, I have them displayed on the 1-minute chart by having their lengths set to 1,000. And here we run through the remaining part of the day. We've got bounces on half gap, running up to this 200 SMA on the 1-minute chart and this pivot point, retreating back to half gap. And then later, when the market finally chose a direction to be bullish on the day, it started bouncing off intraday VWAP. And then once it stopped bouncing on intraday VWAP and broke above VWAP, then it started bouncing on VWAP. And then it decided to fake out some bulls and run all the way back down to previous day close, 200 SMA, and intraday VWAP before bouncing strongly there. And here we have NDX with the exact same story. You're bouncing off pivot lines. You're bouncing off other major lines, previous day's pivot lines, mid-pivot lines. And remember, NDX and SPX are the big boys. They are the dog that wags the tail. It's not the tail wagging the dog. Remember, ES may have on average around $500 billion of transaction volume every day, but SPX has about $1.36 trillion. So if you're trading ES, it's so important for you to be watching the lines on SPY, but also very specifically, you want to be watching SPX and NDX for reaction at specific lines, pivot points, the daily open, half gap, previous day close. These are the spots that the big banks and the institutions and the huge hedge funds, where their black box algos are making their reversal decisions. And they are trading in such enormous volumes that they can reverse the market at any one of these spots. And again, as I've said before, algos are simply a list of instructions. An algo never says, oh, when the market rolls over to here, if it feels right, let's take a bounce and start buying. It never says anything like that. It's very, very specific. And what they do is they watch a ton of different charts, ES, SPY, SPX, NQ, Qs, NDX, both VIXs, VIX and VIX futures. I'm sure it watches the composite, and it probably watches the Dow and the Russell as well, to a much lesser extent. But it's watching these on the 1-minute chart, the 5-minute chart, the 15-minute chart, the 30-minute chart, and a ton of tick charts. And on all these different various charts, you will have some lines that are the same, like previous day close, the day's open, the half gap, the pivot lines, but all the moving averages will be different at different spots. And when the algos are watching 30 or 40 different charts based upon the fact that they're watching 10 different charts on 4 or 5 different time frames, and when they all hit a spot, whatever that spot may be, some significant moving average, half gap, a pivot point, whatever it might be, when they hit a spot on 80% of those 50 different charts that they're watching, it may trigger a buying program that will reverse the market at that spot. And I see it happen every day, multiple times per day, where you can get literally pinpoint entries to take scalps. And a lot of guys will say, first of all, they'll say, I'm a purist. I like trading price action, and I don't like having a lot of things on my charts. It's just, it's all very confusing. And they'll also say, oh, here's an instrument coming down and making a bounce, and then it's putting in, slightly a higher low, so I'm going to wait till it gets up to here for confirmation before I take it for a long. And that's fine. But what I'm saying is you can know precisely where to take an entry and have a very, very small distance set for your stop. Rather than beginning your entry here because you've gotten confirmation and having to set your stop $500, $600, $700 away. So anyway, that's all I have for today. I intended on having this be a much shorter video than this, but let me ask you this. If you have enjoyed this video at all, if you've learned anything, or if you simply enjoyed it, please reach down and give me a like. I would really appreciate it. It would really help the channel. And if you'd like to see more videos and be informed when those new videos come out, please consider subscribing. Okay, again, that's all I have for today. Thanks a lot for watching.